Hello everyone, this is Muhammad from StarseedFX. In today's video, we are going to learn how to enter the trade from a lower time frame after marking our discount zone or premium zone using Fibonacci. In the last two videos, we already learned how to mark a break of structure, a breakout, the difference between break of structure and breakout, how to use Fibonacci to mark premium zone and discount zone. Also, we did learn how to mark ABCD pattern. Today we are going to learn how to trade the premium zone or the discount zone from a lower time frame. I usually suggest people when they receive the alert from H1 time frame to trade it from M1 time frame if they are looking for a very high risk reward ratio. Yes, the reward is very high, but also the risk is very high because of the too much noise coming from M1 time frame, a lot of fake patterns from M1 time frame. And yes, maybe eventually you're gonna make it. Your reward could be like 1 to 20, 1 to 25. It depends, of course, on the market movement. So if you can handle the stress of trading from M1 time frame, you may lose 3 times in a row, 4 times in a row before the market goes in your desired direction. That's fine. Otherwise, I would suggest our members to trade the H1 alert from M5 time frame if they are looking for refining the alert and trade it from lower time frame. If the alert is from H4 time frame, I would suggest also to trade it from M5 time frame or M15 time frame. After you receive the alert from StarseedFX or after you mark your own trading zone, there are 2 ways to trade it. Number 1 is to trade it from lower time frame. As I said earlier, if your trading zone or your alert is coming from H1, I would suggest to do it from M5. If the alert or the trading zone is from H4, we still can do it from M5 or M15 time frame. Number 2, we can trade it directly from the high time frame where we mark our trading zone or we receive the alert. So if we are getting the alert from H1 time frame, we are going to trade from H1 time frame. If we get the alert from H4 time frame, we are going to trade it from H4 time frame. But today we are going to focus on how to trade the alert from the lower time frame. In today's example, I'm going to use a buy alert that was sent to our StarseedFX members Euro Canadian from H4 time frame. If you didn't watch the last 2 videos, you will find the link in the description below. It will help you to understand what we are talking about here, the difference between break of structure, breakout, how to mark the ABCD pattern, and how to use the Fibonacci, because you are going to hear that a lot in the coming minutes. Here I have a change of character, meaning the market was moving downtrend, broke the last lower high, and changed character from downtrend to an uptrend. We have got a higher high confirmed. Why? Because we have the highest bullish candle here. The low is broken by candle body, and that confirms the higher high. Our higher low here will be confirmed once the market break the higher high or confirm breaking the structure. Here, the buy alert that was sent to our StarseedFX members. Once I get the alert, I move to M5 time frame to see if I get my market setup to enter a trade, then I trade from M5. If I couldn't find my setup, then I move to a higher time frame such as M15, trying to find a good setup before placing a pending buy. The pattern I'm looking for to enter a trade from a lower time frame is ABC pattern. Yes, you heard it right. Only ABC pattern. I don't need D to be confirmed before I enter a trade. So the pattern I will be looking for is ABC pattern. Let's cut the chart over here before we move to the lower time frame. Then move to M5 time frame. For ABC pattern, it's exactly the same, and just is the same as I explained in the last video, ABCD, but this time is without D. Okay? To start buying, we have to understand the market structure in the lower time frame, okay, or even from the higher time frame. We are using the Fibonacci to mark between the high and the low of the market to mark our discount or premium zone. For buy, we wait for the market to drop to the discount zone, then we start trading. That means in the lower time frame, the market was moving bearish. We know here, the market here is bearish. All the way, the market is bearish. There is no question about it, right? And now, the market is in our trading zone for buy. So I will be looking for the lowest bearish candle to start finding A. Here is the lowest bearish candle. First, I want the high of the lowest bearish candle to be broken by candle body. And of course, here we can see it's broken by candle body, and that will confirm A. For B, I want the low of the highest bullish candle to be broken by candle wick or candle body. This candle, we have the low here, is not broken or anything. This bullish candle here is higher, but the low is not broken, and so on until this candle. Let's enlarge our. This candle here is the highest bullish candle before it is broken by candle wick. So I have B. A, B. For C, I want B to be broken by candle body. For C, I want B to be broken by candle body. Here, B is broken by candle body, so I have C. Okay, A, B, C. Now I have C confirmed, right? And this is the highest bullish candle. Maybe we can also delete in here just to show the example. I have C confirmed. Now, this candle here is the highest bullish candle. So I use Fibonacci to mark between the low of C and the high of the highest bullish candle. Or I can use A, so my Fibonacci will be from A to the high of the highest bullish candle. Okay, so I have two options. Once B is broken and C is confirmed, I use Fibonacci either from C to the high of the highest or the latest bullish candle, or from A to the high of the latest bullish candle. Whatever you like, both ways are correct. So if we use this example here, from C to the high of the latest bullish candle, we will divide the market again into two zones, premium zone and discount zone. We are going to place our pending buy at the discount zone. You can choose to place your pending buy at 50%, 61%, or 78%. Your take profit target can be at 0% level or minus 27% level. Let's talk about the take profit at the minus 27% level. That makes more sense, right? And let's see the differences in the reward ratio. If you place your pending buy at 50% and your stop loss at 100% here, your reward will be 1.5. If you move your pending buy a little bit lower to the 61% level, your reward will be 2.3, 2.29, almost 2.3. If you move it lower to the 78% level, your stop loss is always at 100%, yet your reward is 4.89. So it's like almost 1 to 5. So it's your choice. If you want to just get almost 1 to 1, you place your pending buy at 50%, you'll take profit at minus 27, and that will also give you a larger space for your stop loss. If you want more reward, you can lower your pending buy at 61 or 78. The more your pending buy is lower, you may not have your pending buy triggered. Okay, it's more about, I don't want to say luck, but we never know the market. So someone want to play safe and do, okay, I will do just at 50% and I'm okay with 1 to 1. My wife and would like to place it at 61.8. Me too would like to place it at 61.8. So like somewhere in the middle. I don't want to get 1 to 5. On the other hand, I just want to get 1 to 1. So I give myself a good reward in case I have 1 or 2 trades hit stop loss. With 1 good winning trade, at least I will be a break even. Okay. So before we continue here, let's talk about the other way, or the second way. If you want to enlarge your trading zone here between A and the highest bullish candle, the reward will not be different. The reward will remain the same. Fibonacci settings are fixed. Like it will not be changed. If you trade from A here to the high of the highest bullish candle, or C to the highest bullish candle, the reward will be the same. Look here, if you trade 50% and you take profit at minus 27, 1.5. If you put it at 61, 2.3, 78, 4.98. Okay, so it's not that different. There is no difference here. Okay, so it's your choice. You want to use your trading zone from A to the high or from C to the high. It's up to you. Let's go to our example here from C. Sorry. Okay. From C to the high of the latest bullish candle. And then I place my pending buy at 61 and my take profit at minus 27. Now my trade was triggered and the take profit was hit. So the take profit is 2.3 here. Okay, the first trade was successful here. Let's clean our chart and see what can we do next. Here I got a new high bullish candle. The low is not broken yet. I don't have D yet. Okay, after my take profit was hit, I can do a new setup between C and the new bullish candle, because I have a new 50% in here, and I will place my pending buy at 61%, the take profit at 27. If the market keep pushing up, I will extend my Fibonacci and my pending buy accordingly. I have here and here and here. That's my new market setup. A little bit more. Now market started to retrace down. Now I have my pending buy triggered. That's good. That's number one thing that I was waiting for. But also I got the highest bullish candle here, broken by candle body. So finally, I have D confirmed. I have A, B, C, D pattern. Okay, let's move again and see what will happen with our trade. Let's extend it. I will extend Fibonacci here to see if the market has touched the 78 or not. Didn't. Now, the market reached the 78%. So if you placed your pending buy at 78%, your pending buy was triggered. And here, the market has reached our take profits. So it is a second entry in a row that hit take profit. So now I refined, or now we know how to refine our buy alert from the lower time frame. We need to look for an A, B, C pattern. After we get A, B, C pattern confirmed, we use Fibonacci to mark the 50% zone or the discount zone between C and the highest bullish candle, or between A and the highest bullish candle. You have three levels where you can place a pending buy: 50%, 61%, or 78%. Your stop loss should be at 100%. Your take profit target at minus 0.27%. That's how we can trade the market from the lower time frame. Now, the question is, until when or how far can we go on buy from the lower time frame, from this alert or from this buying zone? Let's go back to H4 time frame. This is our trading zone or trading area, and this is our Fibonacci from the higher time frame. We are expecting the market to reach the minus 27. So minus 27 is the highest point when we stop trading, or when we stop finding buy setups or buy opportunity from lower time frame. Okay, this is number one. Number two, let's go back again to lower time frame. Number two, you remember when we first went down to the M5 time frame and how to find the buy setup? I mentioned only A, B, C, and I said D, I'm going to need it later. This is the time to look for D. Why? Because now I have D, and also I have a lower time frame break of structure. So D here is my lower time frame higher high, and if I have higher high confirmed, that means I have a higher low also confirmed. Higher high confirmed, and I have a break of structure, a higher low actually in this level in here, and that means I have a lower time frame potential change of character. So if the market retraced down and breaking the last higher low, I will have a change of character. So I cannot say I'm in the trading zone in here and I will just keep buying. No, what I will do, I will start looking again from this zone for a new ABC. Okay? But as long as the market keep pushing down, I'm not going to buy unless I have a reverse pattern for A, B, C, and then I can start buying again. I hope I could make it clear enough to you. Now, we can continue trading as long as we have a break of structure, we have a protected higher low, which is a demand zone. Our demand zone is not broken, so the demand is in control of the market. Our market is pushing up. We can start finding another buy setup. Now, let's continue trading. I will use Fibonacci to mark between the higher low and the highest bullish candle. Having my 50%, it is my discount zone. I'm not going to buy from the premium zone. For buying, again, I will buy when the price drop below the 50%. So you want to place your pending buy at 50%, 61 or 78. We already did talk about that so many times. I'm not going to place a pending buy or anything. I'm going to just move the market to see how it's going to move. Now the market has pushed up a little bit and I'm supposed to move my Fibonacci. It's higher, and let's take few movements and then I will move Fibonacci. Okay, it's still getting higher here. So now my 50% zone here is getting bigger, right? But again, our take profit and our risk reward ratio will always remain the same. The market started to pull back. I didn't read our 50% here. The market has not reached our 50%. Okay, so even if your pending buy was at 50%, it was not triggered. But what happened here? I had a new higher bullish candle. This one here. I have it low broken all the way down by candle wick, only candle wicks. I don't have a clear break by candle body. And then the high broken by candle body. So I have a break out. So I have a new market setup. The first one from the higher low to the highest bullish candle. The second setup now, after the highest bullish candle broken, or the low of the highest bullish candle broken by candle wick and its high broken by candle body, I have a new setup. Before I use Fibonacci, again for the new setup, if you desire to keep your pending buy in here as backup for the new pending buy, is okay. If you want to delete the old one and only work on the fresh pattern or the fresh setup, it's your choice. Let's consider we delete this pending buy over here and we move to the new setup. So I will take Fibonacci from here, from the lowest point here of the breakout to the highest point here, and again our pending buy below the 50% zone and the take profit at minus 27. So we got to extend our Fibonacci a little bit here. Okay, now the market dropped at the 50% zone or at our discount zone. So if you have your pending buy at 50%, congratulations, it's already triggered. But let's see what would happen after. Whoa. Okay. The market is moving strong up. That's why it didn't reach or it didn't go below the 50%. Instead, it just touched the 50% and then retraced up again. That was a strong movement. Now, what we have here, we have a new bullish candle. This small candle is higher than the previous one. I have now its low broken by candle body, and the high is broken by candle body. Let's highlight it. And here, again, to make it sure, this, the candle body, that broke the low of the highest candle, and let's mark our new highest candle. The low is broken by candle body. The high is broken by candle body. And here, to see for confirmation, this is the candle body that broke and closed above that highest bullish candle. So I have a new break of structure. I have new higher low. I have new potential change of character, and also I have new market setup. So we will keep going like that from the lower time frame until the market change character from buy to sell. If that happens, then we are going to stop to buy the market until again we have a new A, B, C setup, and then we can place a pending buy. Also, we are going to stop trading this buy area if the market close by candle body below that buy zone. Okay, if the market reach the minus 27 of Fibonacci from the higher time frame, which is H4, we stop buying. If the market breaks below the buy area by candle body, we stop buying. If the market change character on the lower time frame, we stop buying. So today we learn how to trade the market from lower time frame. We learn how to place a pending buy using Fibonacci, where to place the pending buy, where to place the stop loss, and where to place the take profit. We also learn when to stop trading from the lower time frame, and we also learn when to stop trading from the lower time frame.